What is up, YouTube, and welcome back to another Fridge Financials video. In today's video, we're taking a little bit of a different approach in today, talking about cryptocurrency and specifically Bitcoin. More importantly, this article that has resurfaced on my feed about how major Wall Street firm Bernstein, however you want to call it, says Bitcoin can hit $1 million by 2033. So we're going to break this down here. So if you're excited for today's video, feel free as always to like the video, subscribe to the channel, and feel free obviously to turn on bell notifications for all future uploads. Now, most of the time we talk about options trading strategies here, talk about financial education, we talk about, macroeconomic stuff. Today we're kind of taking a little bit of a backseat approach. Actually, not a backseat, more of just going to the different direction, and we're going to be looking at cryptocurrencies. Now, as you will see, we're looking at Bitcoin here, and the focus will be on Bitcoin, nothing else in that nature. Just talk about Bitcoin and why they're looking at a $1 million price prediction by 2033. Now, as you will see, this article is dated as June 14th of last year, so it's a little bit outdated, but it did resurface again recently, and this is what I wanted to bring to your attention, some pros, some things to remember, and hopefully you get some education as we go. Now, again, this resurface is looking at having a very bullish long-term prediction of saying it could hit $1 million by 2033. Right now, it's about 107, 106,000-ish around there at the time of recording this. So that means you're basically looking at to basically 10x between now and 2033. So in 8 years, a 10x return would be absolutely amazing, obviously. Obviously, who knows what will happen in this case. But they also predict a price point of $200,000 by the end of 2025. And again, we're about halfway through right now, and it's about 106, 107. So still a little ways to go here, but they are still very, very bullish on Bitcoin, right? I didn't mean to click that, by the way. And so I was curious to see where does this come from and what's the idea behind it. And I did go into their earnings relation or into their investment relations document. Someone was posted recently, and it brings up the Bitcoin price forecast for MicroStrategy coverage analysts. And you'll see some big names on there, like Barclays is a big one on there. There's the Bernstein one right there. Other ones I'm not really that familiar with, but they are ones that are tracking Bitcoin. They're talking about Bitcoin, where it's going to go from now all the way up till 8 years out, and what it could possibly mean. Now, I have a couple things with this to explain, and here's my reasoning to it, okay? So a lot of these forecasts are for 2025. There's almost every single firm has put a forecast for 2025. That's good. Cantor, who knows why? Mizzou, I have no idea who that even is. They don't. And again, you'll see they have the average here of $161,000 for an average price point of Bitcoin at the end of 2025. And again, you take all these numbers up, you add them up, and then you find the average, okay? Job done. To me, what's really interesting about this sheet here, because this is where I'm gathering that this is a investor presentation from MicroStrategy because they want to release more preferred stock, and this was part of it. The preferred stock is called Stride. They've done this before to raise more capital to then buy more Bitcoin. So there's a whole different situation. You can read through this whole thing here about what they talk about. But what's interesting in this presentation, when I saw this chart here, was that the averages don't make any sense. After 2025, the average price prediction of 2026 is $225,000. Why is that? Well, because Benchmark's the only one who put in a prediction for next year. $225,000 divided by one investor or one firm gives you an average. This one gives you a range. For this one company, you find the halfway point of this one is your average. That's where this number comes from. This one, take these two from Bernstein and from BTIG, add them up, or from Cantor, I should say, add them out, divide by 2, $400K. And then there's one prediction way out in 2033, which is Bernstein. And they say, oh, the average prediction is $1 million. Well, no crap. There's one person here. There's one firm who's got a prediction already. And what this brings to my knowledge, right? I'm someone who teaches statistics in the high school level, and this is a very huge topic, is when you're looking at data, you're looking at articles, you're looking at titles, read more into it. Because I could tell you this right now. You could take this table and then just title it in an article and say, the average firm predicts Bitcoin will be 1 million by 2033. And you're not wrong, because there's the average. The average firm. The average from the firms is $1 million. But there's one forecast only. A lot of forecasts for 2025, one for 2026, one range for 27. They got rid of 28. I don't know what happened to that one. That one's just not here. 29 and 30 is here. And then they skipped to 33 and it's $1 million. So this table tells me two things. Articles, companies, news outlets can take this and they can word it however they want, and it's not factually incorrect, but it's also not the full picture. Because if you read this article title and it says average firm analyst price target for Bitcoin is 1 million by 2033, and they pop this up here, it's not wrong, but there's not a lot of substance here. There's not a lot of data here. There's one analyst, for example. There's two here. There's one here. There's one here. This is a good one because you have actually 8 out of these 10 analysts giving you a price point for Bitcoin. And you're sitting there saying, Fridge, well, what is the point of this? Then why would they do this, right? What is up with all of it going from everybody has a prediction for 2025, but not a lot for 26 and onward? And the idea to think about is that it's still considered a speculative asset, right? A lot of people don't understand cryptos. They don't understand Bitcoin. They don't understand the purpose of it. Why can't I just buy gold? Why can't I just do this instead? What's the point of cryptocurrency? It's digital. I can't see it. And my first argument is, if you think about it, if you want to go from the literal viewpoint of it's digital, I don't even see it. A lot of your money these days is digitalized. It goes between bank to bank to bank to bank to bank. And you look at your app and you'll see how much money you have there. Like, there is value there, but it's not physical. Could you go get the physical cash? Of course you can. I'm not saying you can't. Bitcoin, you can't. There's no physical coin that you get. So I get it. But a lot of us rely on payments and spending, but a lot of it's digital. So that's like the face value of that. I'm not saying it's like the dollar, because it's not. But the thing that's different with Bitcoin compared to other cryptos, like Dogecoin or the meme coins or any other cryptos that are like pump and dump schemes and everything else, Bitcoin has a fixed amount, right? There's only a certain amount you can have in the universe, and whoever owns it, right? You can't make more. They're not going to make more Bitcoin. Just like a car, they're going to keep making more and more models of cars. They can print more and more cash. But with Bitcoin, the amount you have is the amount that's there. It's finite, right? And to me, that's what kind of drives the demand up more. Like Dogecoin, there's an infinite number of supply of Dogecoins I printed out here. Ethereum's a lot of value. There's a lot of Ethereum tokens out there. But crypto with Bitcoin is very finite. It's a smaller amount. And that's where there's the demand. And if you think about how supply and demand works, the idea behind it is that if there's a limited supply, but a lot of demand, that's what pushes these prices even higher. And here's an example. I believe I talked to New Fish Big Pond about this quite some time ago about Bitcoin. And I'm someone who does have some small allocation to Bitcoin. New Fish Big Pond, and I know a lot of after hours you have a lot more exposure to it, which is totally great. I'm not comfortable there just yet, but I like to compare it to baseball cards, believe it or not. And here's why. The T20600 Wagner card is a vintage card. Very limited supply. It's considered the holy grail of baseball cards. There's less than 100 copies known to exist. Supply. Very limited supply. And it's also known as the most valuable one. And there's a lot of history you can look at behind it and kind of look at the data here. But the more important thing is how many exist. So this tells you, look at the supply. There's 8, 10 that are ranked, that are graded 1, 1.5s, 2s. There's one that's a grade 8, near mint condition 8. Okay. That's the highest graded Hannes Wagner card that will ever be out there. They're not printing this again. It's from 1909. So it's historical, right? There's a lot of history behind this. And take a look at what we're looking at here. How much is it worth? Well, the most recent one sold for $7.25 million for a baseball card. Just for one. Just for one. The poor to fair ones, which are in awful condition, can sell for $1 to $4 million. A piece of cardboard that is in awful condition could sell for $1 to $4 million. And again, as the grade gets higher, in case you're not familiar with baseball cards, as the grade gets higher, the value is worth more because it's in more of a mint condition, right? This is near mint condition, so on and so forth. Has it been a good investment? Well, take a look. The annualized return of the Hannes Wagner card from 2004 to 2020 is about 17%, and the S&P is about 8.5%, or almost 9%. A baseball card that has limited supply, that you can only have very limited access to, has outperformed the return of the S&P 500 for the last 16 years annualized return. Over the last 16 years, it has a 17% annualized return over 16 years. This card was sold for $101,000 in 2004. So you can look through the data, you can read through more and more. And, historical annualized returns for PSA 3, same thing. Here's the price points. Again, the prices obviously get more and more. But here's the really interesting thing as well. Graph of PWCC's top 100 vintage cards versus the S&P since 2008. The most vintage cards with the most limited supply, look at the return in the blue compared to the S&P 500 in red since 2008. Now, people sit there and argue and say, well, Fridge, I know that, these cards are legit. I can hold them. I have this card with me. And it's like, yes, that is 100% true. But imagine down the line, you're able to use Bitcoin to purchase things. I know that at one point, I think Tesla said you could buy a Tesla with Bitcoin or Dogecoin, whatever it was. But imagine that Bitcoin is more of a store of value, okay? Because it's a limited supply and there's a lot of demand behind it. And also, again, there's not as much, it holds the value better. Just like gold, physical gold does, Bitcoin also holds value as well because it's limited supply. The dollar loses value every year because we print more and more. Supply is so much, the demand goes down. You will see that, the price of the dollar decreases. That's usually what happens. So what does this mean? Honestly, I don't know if I want to say $1 million price point is feasible for 2033. Maybe it is. I would love to come back to this presentation in the next investor release, whatever it is, and see if more of these get filled in. Because to me, this table right now is showing that it is still considered a risky speculative investment. And I'm not saying it's not, because it is. I still am a believer in Bitcoin. I think it has a lot of purpose in the future here, and some people don't, and that's totally fine. But the major takeaways here are to A, make sure you read into data points and into tables and into articles, because this tells me nothing. This tells me more, but this doesn't. And then also just to, again, do the research that helps to back your investment decisions and everything else. So again, Bernstein's predicting a $1 million price point in 2033. Is it possible? I don't see why not. It's a tenth the way there already. So thank you guys so much for watching today's video. Again, if you made it this far in the video, feel free as always to like the video, subscribe to the channel, and as always, turn on those bell notifications. We hope you guys are making money in the market in some way, shape, or form, whether it's through Bitcoin, through MicroStrategy, through a Hannes Wagner baseball card. However it is you're making money, hopefully you are doing it in some way, shape, or form. And as always, I will see you guys in the next video.